And we are live streaming. Welcome, everyone, to our August First Friday Facebook Live here on the Ask a Bookkeeper show. Our mission on Ask a Bookkeeper is to take the big, intimidating ideas that often scare small business owners away from following their dreams, and we simplify them and turn them into just another fun part of the adventure of running a small business. So think of us like Sesame Street for small business owners. Our show is largely crowdfunded, which is why we're not advertising or thanking any sponsors today. So if this information is helpful to you in any way and you want to see this show succeed and grow, please visit askabookkeeper.com and click the button to donate. From there, you can also access our YouTube channel, our Facebook group, and in those places you can catch past episodes and even participate in ongoing discussions between our episodes to help your business succeed. So please subscribe to us on YouTube and be sure to tell your friends how awesome this is. I'm your host, Ingrid Edstrom, the Priestess of Profits, and I am here with my co-host, Penny, the Practical Professional.
Hi, everyone!
Now, as many of you already know, one of our favorite things to do here on Ask a Bookkeeper is to dive a bit deeper into some of the accounting nuances of a particular industry. And today, we are very thrilled to have Jeanette Tan of Winery Solutions here to talk with us about some tips and tricks for the wine industry. Jeanette, welcome to Ask a Bookkeeper. Please tell us a bit more about yourself and your business.
Hi, Ingrid and Penny. Thanks for inviting me here. I run a business called Winery Solutions, and I work exclusively in the wine industry, and I provide 3 different kinds of service. First, I consult with wineries, and I work exclusively with the small boutique wineries under about 15,000 cases. I also run a membership website where all of my information is available in courses. So a bunch of courses and mini courses and information specifically for the wine industry. And then I also teach live accounting courses in live seminars. And we go throughout the West Coast primarily, throughout wine country.
And are you usually doing those presentations at wineries, like for the customers?
No, we do those presentations in a seminar format. So small hotel. There's a couple of these types of classes and seminars that are available in Napa and Sonoma County, and then likely up in Oregon and Washington as well. What we do is we bring the seminar down into wine country. So we were just down in San Diego at the beginning of June, and then we're going to be going to Paso Robles. We'll be going to Sonoma County, but also we'll go up to Washington, Oregon as well, probably next spring.
Okay. Yeah, we've got a lot of wineries here in Southern Oregon and appreciate those things. It sounds like you do a lot of education. So please let us know when you're coming to town. We're happy to spread the word to all of the wineries here in the Ashland area.
Great, thanks. Yeah, there's a lot to learn about winery accounting. And with the blossoming of the small wineries, there's just a lot to know. Right now, there's a little over 9,000 wineries in the United States. And of those 9,000 wineries, 5 wineries sell 90% of all the wine sold in the United States.
Wow.
And of those, a full 85% of the wineries make less than 10,000 cases. So it's a huge number of wineries that are actually these small ones, and these are all run like mom and pop businesses where there's non-accounting professionals doing the bookkeeping, and that's the reason for the service that I provide, and that's the niche that I work towards, because the large wineries have accounting professionals on their staff, but the small wineries are the ones that need the education.
Wow. So when you talk about 5 wineries having 90% of the business, does that include if they're labeling and selling for other wineries? I know sometimes wineries do that, right?
Yes. Yeah. Then that's called private label. No, actually a lot of the large wineries, for example, Gallo, we're very familiar with Gallo. Well, Gallo actually markets under a number of different labels. So if you look really carefully when you're at a grocery store, for example, grocery store type setting, if you look carefully on the label, you're going to see a lot of those wineries are actually Gallo brands. that are in the grocery stores.
Wow. And so it's all their own grapes and in-house processing and everything?
It's certainly their in-house processing, yes, and definitely for the large wineries, it's their own in-house processing. They might contract out for the grapes. In fact, in order to get the number of grapes that they need for their production levels, they will contract out for the grapes. So again, a lot of the growers are used to selling to these large facilities. And they have learned over the last, really, it's very recent, like the last 10, 15 years, they've learned to keep their best blocks of grapes because they know which blocks have the best grapes. They've learned to keep those for themselves and develop their own brand using their best grapes. So it's very common for a vineyard owner to sell 90 to 95% of their grapes and keep a small amount for themselves, which is really converting to maybe 3,000 or 5,000 cases of wine. And again, so these are the guys who need help with their small batch of premium top-notch grapes.
That is fascinating.
And you're there for them.
And we are here for them to hold their hands.
It sounds like it's really an artisan industry, and that is so amazing. So I want to dig a little bit deeper into accounting for the wine industry. As many in our audience already know, here at Polymath, we specialize in accounting for tours and activities industry and really focusing on business strategy for tours and activities. And one of the main things that we focus on with our clients is helping them to understand their gross profit margin, because different business models have different needs and different nuances, particularly in the costs that go into producing their product or their service. So I would love it, Jeanette, if you could dig in with us a little bit into what makes up a gross profit margin for the wine industry. And for those in our audience who don't understand what gross profit margin is your sales minus your costs, and the ratio between the costs and the sales. So understanding what that gross profit is, sales minus costs, before your overhead expenses. What kinds of costs are specific to the wine industry?
Well, the costs that are specific to the wine industry are going to be the production costs to make the wine. So first of all, a winery is actually a manufacturing entity because you're taking a raw product, you're taking grapes, and you're converting it into a completely different product, which is luscious, fabulous wine. And so the costing model is actually a manufacturing costing model. So we have to be able to identify all the production costs as separate from the overhead and sales costs. And the second thing that's unique about the wine industry as far as production is that the production cycle is very long. It's not like in a bakery where you can mix it up in the morning and then you're actually selling it, a couple hours later.
That's
like that at all. And I actually worked in a previous life. I actually worked in a bakery, so I'm very familiar with that process.
Very cool.
Yeah, but in the wine industry, it's very common to have a 2-year cycle, possibly even a 3-year cycle. So grapes are harvested in the fall. A light style wine like a rosé or a Sauvignon Blanc can be bottled in the spring and then sold. So that's a good 5-6 months right there. But then you have Noir and your Chardonnay might not be bottled until the summer. And then there's many wines like your Sauvignon Blanc. They could easily be aged for a total of 18 months. And then it's not unusual for them to be then bottle aged for another year before they're released. So you're looking at a 4 or 5 year life cycle, production cycle for these wines. And you have to accumulate the costs throughout the entire production cycle, from the time they're grapes until the time it goes into glass.
And you're not getting any profit on any of that until like 5 years later or whatever.
Until you actually sell the wine.
Right.
So there's a huge confusion in the wine industry about the difference between the production costs and the cost of goods. So the cost of goods is the value of the wine that is actually sold, not the cost of production. Now, if you had if you had a bakery, for example, your production cycle is so small, you can almost count your production costs as your cost of goods. But you can't do that in the wine industry because of this long cycle. So you have to have good procedures in place to calculate first the cost of the bulk wine, and then again, we have two different kinds of inventory. We have bulk inventory, which is your work in process, and then you have your bottled wine, your case goods, which is your finished goods. So in QuickBooks, we will use the standard inventory process workflow for the case goods, but the bulk wine, we have to do all that calculation on Excel spreadsheets in order to allocate the costs correctly and maintain the beginning costs and the beginning and the ending costs of the wine.
Wow.
So first you have to identify your costs of your wine, but then you have to understand your gross profit by the different channels. So one of the challenges in the wine industry is that they can sell through many different channels. We have three basic channels. One is called distribution, where we're going to sell to somebody who's going to then sell to, say, a grocery store, who's then going to sell to the final consumer, and that's called the three-tier selling model. Then we will also sell directly to, say, a restaurant. This is very common, to sell straight to a restaurant. So we call those wholesale accounts. And then we have direct to consumer, where you're selling through your tasting room, you're selling through your club, you're selling through your website, and you're selling directly to the customer. So your profit margin is going to be very different depending upon what channel you're selling in. And it's critical for the winery to have the right sales mix so that they generate the gross profit that they need to then cover their overhead. Now, in the wine industry was traditionally sold through distribution. The direct-to-consumer channel is, again, a brand new thing that's really only, I'd say, 10, 15 years old.
Thanks, Internet.
Yeah, exactly. Well, it's not so much. It's interesting what I should know the history of how it happened, but yeah, the internet's part of it. Tourism is part of it. People love to do vacations and trips to wine industry.
That's what I was thinking, like wine tours. I don't think that was really a major thing 20 years ago, right?
Oh, sure it was. Wine tours have been happening for quite a while.
Wine tours have been happening for a while, but somewhere along the line, somebody figured out that developing a wine club is really one of the key generators to the success of a small winery. I mean, because you're not going to sell a whole lot of wine one at a time to the visitors coming to your tasting room. The key is to give those visitors a fabulous experience, and so that they'll join your wine club, and then you have a customer for life.
Get them hooked.
Yeah, get them hooked, exactly. And so a small winery that's successful is successful because they have a strong club, and they're able to generate significant sales through their club runs.
Yeah.
Right. And so is the profit distribution the way you would expect with most businesses, where direct to consumer is going to be most profitable, and then the further away you get, it's less profitable? Is that true?
Correct. Typically, your distribution sales are going to be at 50% of wholesale, of retail. But here's the thing: the small wineries, their cost of production are much higher than your large wineries. Gallo, just because of the scale of their facilities, can make their wine a lot cheaper than the small wineries can make them. And so if the small winery isn't really careful in paying attention to their wine, their costs, it's really common for them to not even make any money in the distribution channel, or for them to make just a teeny amount of money. Whereas in the direct consumer side, that's where they're going to make their money. That's why the small wineries, they cannot be concerned. You cannot focus on top line revenue. You have to focus on your gross profit from each channel, and pay attention to that sales mix.
So now I'm curious about, since we're talking profit, wineries always seem to be very profitable. Like you see wineries and they're huge, they're beautiful, and there's obviously a lot of money that goes into creating that image. Is that just an image, or are they really as profitable as one would expect?
There's an old saying: how do you make $1 million in the wine industry? You start off with $5 million. So,
yeah, I kind of wondered about that.
Yeah, it takes a huge cash investment to start a winery. So you typically find people who are who people who have, who've had a successful career and decide to do this as a hobby kind of thing because they're passionate about wine. But yeah, it's not, because of this long production cycle, it's not unusual to have $1 million or $2 million worth of inventory that's sitting there, ready to sell. So you have to have this cash up front because you're not going to get financing for this. So it's very hard to start up a winery because of the huge upfront cash costs that it takes. Now, as far as the images, the wine industry is kind of stuck on this notion that they have to present this elegant, image, and there are wineries that are trying to change that. So there's especially down here in California, or actually, let's say Santa Barbara and San Diego. There's a lot of wineries that just like to have a very casual feel to their tasting rooms.
Little more farm, little less glitz.
Exactly.
Yeah.
And I've been seeing some of that in the Rogue Valley too. So yeah. That's cool.
So Jeanette, I want to ask something you were saying earlier about just the amount of time that it takes in the bottling process and such like that. Let's touch on seasonality, because that's something that I work with a lot in the tours and activities industry, is the seasonal businesses. And for the tours industry, it's recognizing that oftentimes, especially when operators are running custom tours, they might be booking tours 2 years in advance for, a custom safari or something like that, and getting deposits from those clients way in advance that needs to be held in trust. And then we're able to use those pre-bookings to kind of get an idea of what their cash flow is going to be out into the future, which is really, really nice. But they still have to make sure that they are managing that cash flow. How does that look for the wine industry? Because having so much money locked up in inventory assets, and also having a seasonal sales cycle as people are coming through and touring wineries. What are the seasonal challenges, and how do you work with your clients to budget for those?
Yeah, the cash flow issues are significant in the wine industry. Even a successful, profitable winery needs to have a line of credit in place, because your two big outflows of cash are going to be purchasing your grapes, which you're going to make the payments for your grapes anytime from late fall, say November, through March. Those typically you have terms to pay your grapes, but they have to be paid in that window of time, and that's a huge cost. And the second big hit for expenses is going to be your bottle runs, when you actually put the wine into glass. And those bottle runs are also very expensive. So those are your two big outflows of cash. And then as far as revenue coming in, your big influxes of cash are going to be your club runs. Otherwise, there is a little bit of seasonality through the year. Sales are slow through the spring. And then depending upon where you are, they're either dead or they're busy in the summer, depending upon, how your industry, how your region is. The fall, you always have good sales because wine country is so gorgeous to visit in the fall. And a lot of people will visit in the fall, and then they'll die off again in December, January. So you have a little bit of fluctuality with your, say your tasting room sales, but you have your huge spikes from your club runs, which is why they're so critical. And if you have a steady club, that's essentially money in the bank. You know how much money you're going to have coming in. So in order to manage this, we have to prepare a cash flow forecast, because you have to know ahead of time what your dip is going to be. And if you go to the bank 6 months ahead and say, hey, look, I've done my projection, I know I'm going to have a dip here, we need a credit line of $250,000. You're more likely to get that because you've planned ahead. But if you try to go to the bank, the day before a club run, when you're struggling to pay those bills and pay payroll, you're not going to get that line, because they're going to say, well, why didn't you plan for this? And unfortunately, that's what happens is, they're going along, and then all of a sudden, oh my gosh, I got to pay. I've got all these bills that I have to pay. They're not paying attention.
Yeah, banks only lend money to people who don't need it.
Yeah, exactly. So we will work with our clients to prepare an annual budget and forecast during the fall. so that we are then prepared for the next year and can make any changes in their lines of credit as needed.
That is fascinating.
Nice. Wow.
So I guess when it comes to the wineries and having that cash in a line of credit, if there was what would you recommend for somebody who, I mean, of course, all business owners for the most part start a business because they are passionate about this thing that they want to do. Someone's really passionate about wine. Somebody who started a winery and they're passionate about it, and maybe they got this thing started wrong. How can they start to restructure? What does that first step look like? Is there something they can do in their books as far as organizing their chart of accounts?
Yeah, so what's really interesting is, and again, we see this time and time again, because people who start wineries tend to come from a successful day job. They have a financial team in place. They've got their tax accountants, and that is their trusted advisor. So they'll go to them and they'll say, hey, look, I started a winery, and the accountant will give them a chart of accounts to use. Well, unfortunately, because that accountant's not a specialist in the wine industry, the chart of accounts isn't effective. And what I see all the time are the production costs up in the cost of goods section of the chart of accounts. So the single thing, and this just messes things up it just messes things up. Well, first of all, you can't get an accurate P&L if you have production costs up in cost of goods.
Because they'll be sitting there for up to 5 years, like you were talking about, yeah?
Well, right, yeah. It doesn't give you an accurate view of what your true profitability is. Secondly, the accountant is typically doing the costing at the end of the year, and then they'll do a journal entry to record the costing. Now, this is accurate from an accounting point of view, but it's not at all useful from a management point of view.
Right.
So you have to put into place the procedure to calculate the cost of your case goods, and you have to use the QuickBooks inventory workflow correctly so that you then can generate accurate financials in the middle of the year. And again, that's another huge step that I see people not doing, is they're not setting up the inventory items correctly so that they can capture that.
So, and what you were saying earlier, it sounds like you do a lot of education with wineries. So
Right.
You come to local areas and you speak to wineries and you do seminars on these topics and teach them how to do it. Is that right?
Exactly. Yep.
That is fantastic.
Yeah. So you can come to a live seminar, but then all of my courses are available on the website, and people can go through the courses and clean up their QuickBooks file, set it up correctly. I have two main courses. One is how to use QuickBooks in the wine industry. So that's how to set up QuickBooks so that it's effective for the wine industry. And then I have another course on how to calculate the true cost of your wine. So now that you've got QuickBooks set up, now how do you take those costs and do the calculation correctly?
Wonderful.
Wow.
Well, we do have a couple other accounting professionals that are participating with us here. We've got Alicia Pollock and Janice Johnson lurking here on
Hi,
Zoom.
Alicia and Janice.
If you have any questions, please feel free to post them in the chat, because this is really fantastic, fascinating information from Jeanette. And I'm so glad that we've got you here today. And we do have just about 5 minutes left before the end of our chat here. So short of seeing any questions popping up in the chat, Jeanette, if there were one... Oh, you've got a question, Penny.
Yeah, I have a quick question. So Jeanette, you talk a lot about the advisory services that you do as far as the online resources and the seminars that you teach and everything. Do you actually work one-on-one with clients as well? And how do you choose those clients?
We do work one-on-one with clients, although my client list is, I'm rather overbooked right now. So in order to become a new client, you have to qualify. And in order to do that, you have to take our fundamental course using QuickBooks in the wine industry. Because once you've done that, then we have a common language to talk about. Mm-hmm. And I can then, in a very short conversation, explain to you what your next steps are. So that's typically, how we get started is someone's got a messy set of books. I give them the steps of how to clean it up, and they do their own cleanup. And then I will also work with wineries to pull their costing together at the end of the year and do that piece. But again, they have to follow the procedures, because we're not going to reinvent the wheel because someone has some goofy way of doing it. This is our procedure, and you can, again, you go through our course to learn the procedures, and then just supply us with the information, and we'll pull it all together.
Well, that sounds really familiar. Hey, Ingrid?
Yeah, that's actually a fantastic strategy, to have a course that is just boxed and ready to go for potential clients. Janice just posted, she said, just in general, in any industry, what would you recommend for us to get training on budgeting using QuickBooks?
Well, budgeting using QuickBooks. Okay, so first of all, there's a wonderful feature in QuickBooks called Export to Excel. So the first thing about budgeting in QuickBooks is to set up the budget, but you have to create the budget first. So you run a profit and loss for the previous year, for example, and make sure you put columns by month. Export that to Excel, and Excel will retain all of the formulas. So now that you have what I call the budget template, now start plugging in the numbers that you want for your budget. And there's actually no magic to it. You have to go through each row and identify whether or not a particular expense is truly an overhead expense that's a fixed cost, or does this expense fluctuate with the level of business. For example, credit card fees. Credit card fees are going to fluctuate depending upon the level of business. So then figure out a formula to tie those two together. So you really want to go through all the expenses line by line and plug in your forecasts, your forecasted numbers on each row. Once you have your business working on paper, on your budget template, on your forecast template, then you're going to bring those numbers back into QuickBooks. There's a wonderful feature in QuickBooks where you can enter the budget, and then from that point you can run actual to budget reports, which are the most powerful reports you can run, because they'll tell you whether or not you're on track with your forecast. And this is particularly important for businesses that have a seasonality. We know in the wine industry that January and February we're going to lose money. We know that, so it keeps owners from freaking out. So
that is important.
Yes, exactly. We don't want them to freak out.
Yeah.
So you always want to track to budget. So the first step in setting up the budget is creating the budget, but use that export to Excel tool with a P&L by month, because that's going to give you a template that's already organized with the accounts exactly the way you use them in QuickBooks, so that when you bring it back into QuickBooks, everything's right there. Mm-hmm. And everything matches. But you have to make your business work on paper, and do a bunch of what ifs.
Yeah. Great strategy. Love it. So if there was one main tip that we wanted to leave our audience with, as far as whether it be accountants, any small business owners, or the wineries that are watching this later on YouTube and such like that, what would that one top tip be?
Okay, so if this is a tip for everybody, try to find an industry expert, because there's nuances in every single business, and the metrics that you want to look at are going to be different. There's going to be procedures that are done a little bit different. What works in the service industry is very different from how things need to be handled in a manufacturing industry. So try to find an industry expert, and you may only need to do just a little bit of consulting with them. You don't have to give all your books to them, but just getting some advice from an industry expert will save you a lot of aggravation.
Fantastic. Yeah.
Wonderful. Well, thank you so much for joining us today, Jeanette. I really appreciate it. This was fascinating to dig into some of those complicated nuances in the wine industry. And Jackie says, thank you, Ingrid and Penny. I enjoyed seeing you today. It's great to see you too, Jackie. Thanks for joining us.
It's wonderful to see you.
Hey. So, Jeanette, how can our audience find you if they're looking for QB Winery Solutions?
Just go to www.qbwinerysolutions.com.
Wonderful. And I will post that in our YouTube description as well, and get this up on Facebook. And thanks so much to everyone who joined us today live on Facebook, as well as here in the live Zoom. And you can join us again next month on the first Friday of each month. Thanks so much, everyone, for joining us on Ask a Bookkeeper. Have a great day.
Bye, everyone.
Bye.
Thanks so much.